Okay, welcome back again, guys. Welcome back to another of my videos on ICC. You know, happy new month, guys. It's the month of June, and I'm gonna be just be going through my trades of May in this video. The trades I took during May. So I'm gonna be breaking them down. The trades I made a mistake on by taking them, the trades I'm gonna take again, and the trades I'm not gonna take again. So yeah, basically let's get to it. So yeah, this is my journal on Notion. I use Notion to journal, and my first trade in the month of May was this trade on Euro USD, was a buy setup. Now this trade was a decent trade. This trade was this trade right here. So this was the trade right here. So basically, yeah, this trade was very decent. I would most likely take this trade again, but as you can see on in this picture, I took the trade a bit too, not really a bit too early, but yeah, really early, very early, not above this change of structure line. So what I would have done, what I would do differently now, if I go to the 15 minutes, I would have waited for price to go above this level right here. This level is high. Price giving me a break of this high and retracing into this level as my confirmation before I enter into the trade. So basically that's what I would have done differently right now. And yeah, that's it for the first trade. So the right trade I'll be taking is when I see price breaking a high. Now this is not a high. This level here is not a high, as I have come to know. This is not so high, and yeah, I thought I used this as my high, and yeah, I would say I was wrong then. So what I would have done, right, currently for this trade, I would have used this entry if I was not awake. This is during the to- what's called Asian session, so I won't be awake during that time. So let's say probably at this time of the day, let's say got into the market at like 8 in the morning, putting my stop loss under this level. I take profit at the high that we have. That is also 1 to 3. Okay, so moving on to the next trade, and in the month of May, the next trade I had was a gold sell, gold sell. So let me go on to that trade and show you guys what I would have done differently. Let me just check the dates. The date of this trade was on the 5th of May. 5th of May. Okay, so this was the trade right here. Let's go to sell on the 5th of May. What I would have done differently. Let me go into lower time frame. Go to that trade. So what I would have done differently on this trade is not really nothing much. I think I would 100% take this trade again. So I'm gonna 100% take this trade again, because first things first, the trade was below our level. This trade was below our pivot level, or the level that was broken. This level right here, and also we had a break of a high, as you can see here. That was a break of a high. We would have either entered during the break or during the retracement. Maybe the retracement wouldn't have given us entry, but if we had entered to do retracements, this is how the trade will be looking like. Going to the next trade in the month of May. Also another gold sale. Now this sale was a bit earlier than the last one I showed you. This sale was about when price broke this level right here. So at this point, not at this point, but currently, if I see this kind of trade again, I'm not going to trade this kind of trade again because yeah, it's just a bad trade. So I would say I took this trade out of desperation and out of impatience. So going to the next trade, this trade was on BTC buys. BTC buys. Okay, I think remember that trade as well. It wasn't quite long ago. What's the 15 minutes? Okay, so this was the trade right here. On the 15 minutes, it looks presentable. Also on the 5th of May. But if I should go on, if I go on the 2 hour time frame, which where we should usually look for trades, you can see that on the 2 hour time frame, we don't have any break of structure. Number one, we have this little break of structure, but we don't have any continuation above this level. So if you go on the 15 minutes on the 5th of May, we can see that we don't have any continuation above this line, any continuation signal above this line, which is our pivot level. So I'm not gonna take this trade again. So that do out of I'm just gonna pull up a note or something just to keep track. Okay. So just keep track. Um one, two legit trades. And currently there is one trade I'm not gonna take in again. Yeah. So going to the next trade, also BTC. I'm not gonna be taking this one again because the breaker structure is not valid, and also the change of character on the lower time frame is not valid. So that is now two bad trades. So going to the next trade on the month of May, we had okay. This is also Euro USD. What time was this? This is also a bad trade because if I go on the 6th of May, it's Euro USD. So this is the trade right here. Entry at this point, just above this line. So somewhere here. Somewhere here. So this is also a bad trade because as you can see, there is no indication on the higher time frame. Actually, there is an indication, but the indication barely made it past this other high that was here. So this indication is not really strong, it's not really valid. So we should look for a higher indication and then a correction and a continuation. But the indication we got is just barely above this line right here. So I won't have taken this trade also again. That makes it three bad trades. So the last trade in the month of May, the first week of May, is this USDT trade, which was actually a good trade for to begin the month of May. So I remember this trade. It was here. I think I've explained this trade right before. So we first of all we go on the 2 hour time frame and we mark up our charts and we see that first things first, what do we see? We see that price broke this high. And when price breaks a high or when price breaks a low, that's when we know that we have an indication. So currently on this trade, we have an indication of price telling us that it wants to go this high. So from the level that was broken, which is here, you can also use that level as well, but I'm going to use this one. from the level that was broken, which is this level, we know that price is going to be bullish from this level to the high right there, that high. So we go on the 15-minute time frame on that day, and we look for price to show us bullish confirmation. So recently I've started using this indicator for market structure. It's called MTF BOS. So just go to your indicator search bar, and you go to MTF BOS, and you should see MTF break of structure. The script is by Lenny. Let's go to Lenny Crew. Yeah, Lenny. Just yeah, you see a Lenny there, and you can just add the script to your chart. So as you can see here, after some after we had the correction right back into this level, first things first, people are gonna try to take this continuation right here, but as you can see, we don't have any change of structure towards the upside right here. The first change of structure we had towards the upside is at this level right here. This level, we have the first change of structure towards the upside. Actually, at this level, but yeah, this one's a bit very minor. So we have the second one here, and this is also a good entry point in the market. As you can see, we see that at this point right here, price was above the level that we're looking to buy from, and price was also giving us bullish structure, which as you can see here, price gave us a break of structure towards the upside and the retracement. So we can actually have a good entry for buys right there, putting our stop loss either half of this level, this whole level, probably here, or under the most recent low. Oh, yeah. But the most safe place to put your stop loss is gonna be probably half of the whole stop loss, or under at least two recent lows. So something like this, keeping taking your placing your take profit at the high, and yeah, waiting for price to play out. So that was a good trade. I'm gonna take this trade again, 100%, because it was a good trade, and yeah, that trade is just textbook trade. So going into the next week, the first trade we have here is a trade on BTC BTC USD. This was actually a bad trade as well, because if I go to BTC on the higher time frame, I can see that there is no really a break of structure on the higher time frame for my indication. So using the indicator, because we all know that ICC is very what's the word? ICC is very flexible and very, and it's open for too many explanation or different kind of interpretation. So I feel like using an indicator, it will be really helpful. Not really as a kind of signal indicator, but the same way we use pivot highs and lows to like to refine our highs and lows, like just using this indicator to um find your indication levels, just for the indication levels. I think that's like that's enough, because some indications may be false, like this level here. I had the idea that BTC was going to be bullish from here to here, not knowing there was not really a break of structure here. Most of the break of structure were already retraced and failed. It was not really clear. It's just it went up, but in a messy way, so not really clean. So This was the trade I took. Think about here, keeping my stop loss under this low and targeting this high right here. So without using this indicator, this trade is actually an okay trade to take because it has the structure of price respected the lows, as you can see. Price respected the lows, except when market open for the new week and price swept under. But yeah, in general, price respected the lows and the structure was there. So going moving on to the next trade. But first of all, let me just journal that I'm gonna I'm most likely, if I'm not gonna be using that, if I was not using the indicator, I'll most likely take this trade again. So on the next trade, yeah, same trade, and yeah, that's just the same trade. I had a re-entry, a bad re-entry, so we're gonna go to the next one to save your time. So we have another trade on J40. So this trade was on J40, and it's actually a good trade. This was the trade right here. So this was the trade right here, this one right here. So we had price making bullish structure on the 15 minutes on that we had price making bullish structure on the 15 minutes for the above this level. So I entered like around this area and kept my stop loss under these two lows. These two lows, which are this one and this one. So I kept my stop loss under those two lows. On the 1 hour time frame, you can see that it has a clean structure. But price came back down to stop us out. And as you can see, price actually played out if I had taken a re-entry. But yeah, I didn't take a re-entry on the next week. So yeah. So normally I don't trade German 40. I was just I would say bored because there were no trades to take that week. So on the 15th of May, I also took a US 30 buy. Going to US 30, when I reflected on this trade, I wasn't really happy about this trade because I was very impatient and this trade didn't wasn't really a very good trade. So this was the trade I took on the 15th of May on Friday. This was the level I brought out. So we have the indication. The indication is really clear. We know that from here to here, price is going to be bullish. So, but if I go on the lower time frame, which is the 15-minute time frame, I can see that you can see that if you track price from highs to lows, if you mark out the highs to look for when price had the structure change, you can see that I use this level as my high, but in hindsight, this is not really a good high. This is not really a high. It's just a consolidation and price went higher. But that's not really a good high. Even if I had any problem with it before, I could have just used the indicator to tell me to know that that's not a good level to buy at since we don't have the change of character. So yeah, I entered the trade being impatient. I got stopped out, and yeah, that's just how it is. So this trade, I'm not gonna take this trade again. I'm just gonna join it among the bad trades I won't be taking again. This one. So going down to the next week, which okay, so this is I think second to last week of May. I had a US 30 sale. If I go into higher time frame, let me just go that. I'll go to the 2 hour time frame, and you can see that on the 2 hour time frame on that date, price at this level, price broke this low right here. Price broke this low, and we know that if price breaks a low, it's going to be bearish from the level where it broke the low to the last high or the last low, sorry. So this was the level that was broken, and this is the level of the last low. This level right here. So we go to the lower time frame, which is the 15-minute time frame, and yeah, we just figure out where we have a change of character, and then we have our entry. So the first change of character I can see in the charts is this one right here. So this was the first change of character. So it's a quite decent change of character, but being realistic, I'm not gonna keep my stop loss at that high. My stop loss is gonna probably be at this low, at the worst case scenario. And yeah, this trade just went to stop loss, and that's actually a good thing to see hindsight, because first of all, first things first, we know that I was meant to take account the trend, because we know that US 30 has been buying ever since April, and I can't just get into sales without extra confirmation, like having one sale setup work out and then entering on the next one. So this was a mistake on my end, and I'm not going to take this trade again, because we're not in favor of the trend. But in markets wise and kind of structural way, or being structural about this trade, I would have taken it again. But going with ICC, where we make sure all time frames align, and we follow the trend, I won't be taking this trade again. So let's go move on to the next one. Okay, this is also the same trade. I lost a lot on this trade, about 3%. So yeah, I kept on entering and re-entering. I didn't really have a plan for that trade. Okay, so this next trade is on BTC USD. So BTC we had a sell setup on BTC USD. If I go to the 1 hour time frame, just to mark out the chart. So yeah, took this sell around this area. I'm going to the 15-minute time frame. I can just go on yeah, show you guys what I saw. So basically, I saw that price made a new indication going from here to here, and with this new indication, I have price retracing, correcting, and continuing, whereby price starts breaking lows again. So this was how the trade was meant to play out. But yeah, the trade got stopped out by this move right here. And yeah, some trades, even though the trade is right, it doesn't always work out. That's it for that trade. Go to the next one. The next trade, which is okay, also a re-entry on that SPY trade, the first trade we had. And then we have entry on USD I'm not going to talk about this trade because I don't really trade USD as well as German 40, and I'm going to try not to trade pairs that I don't trade again. And also we have another one of the last trade in the in the last before the last week, sorry. This trade was on Euro USD. On Euro USD, we had this setup right here. Let me just show you guys. Going to the 2 hour time frame, I'm gonna mark up the level whereby sellers were in control of the market. So from this level right here, we know that sellers are in control of the market from this point to this point, which was our high. So we go on the lower time frame, which is the 15-minute time frame, like we always do. We go to 15-minute time frame, and then we look for price to change character towards the downside. And we do that by tracking our highs and lows. Here we have a high, here we have a low, high, low, high, or equal high, And then at this point, we made a lower low. So we can use this setup right here for entries, right here. Or we can also use this setup right here for entries. We can also use this setup right here for entries, where we have the entry here, stop loss at this level right here, this is the nearest high, and then take profit level at this level down here, all the way down here. So yeah, that's basically the trade for that Euro USD trade. Let me see if there's any other trade. Okay, so yeah, that was the last trade for the second to last week. And then on the last week of May, we have this trade on BTC USD. Okay, yeah, this trade actually helped me a lot. I was down about 9% on my 25K account, and this trade brought me back to break even. This was a one is to four trade, or 4 hour trade. So basically, going to the 12 hour time frame and marking out the level that was broken. The level that was broken, the first level that was broken here in this chart is this level. And like I told you, always mark out your high. This is your low, and this is your high. We go to the 15-minute time frame to look for entries. On the 15-minute time frame, there are things we can see that there are multiple entries. The first entry being at this level right here. But this entry was on a Sunday. So let's not bother ourselves with that because we can trade on Sundays. So then we track the highs and lows until we have a break towards the opposite side. So tracking the highs and lows showed us this level. Yeah, so tracking the highs and lows showed us this level that was broken right here. And we can easily enter off this level right here, surplus above this here high, and take profits at this low. And of course, price came to stop us out right here. But yeah, I would say that this trade is still valid because if you go on the 1 hour time frame, but price also stopped me out as well. But I took a re-entry because I saw that price reversed more than half of what price moved already, and I took a re-entry around somewhere here. So if you go on the 15-minute time frame, on the last entry, we know that price was bearish from here. So we just mark out this level, and when price returns to this level, immediately after going up, we know that price is still valid, and yeah, we just execute that trade, aiming at this high right here for 1:4. Yeah, so this trade, like I said before, gave me about a break even on my funded account, and yeah. Moving on to the next one, actually, there was one last trade for the month of May, which is a gold trade. And this trade was right here. Yeah, so this was the trade right here. If you draw a line right here, straight line, you can see that price had an indication, price had an indication at this level, correction, and then a continuation. Going to the 15-minute time frame, we can see that if you even turn on the indicator as well, we can see the moment that price broke this low and retested this level before price shut down to take profits. So I took this trade for 1:2. I gave it a bit more stop loss room. And yeah, this was basically the trades of May. I think I stopped writing down the trades I'm gonna take. Yeah, let me just check it back. Go back. It's okay. I think I just missed about one, two, or like almost like four good trades. So I'm just gonna put three there, which is seven. So we had about a 50% strike rate normally, and yeah, that's just how it is for the month. That's what that's not just how it is, and that's how it played out for the month of May. See you guys in the next one then.